Now, the next, of course, important question is, so why does this situation exist? And what I want to do now in the next series of slides is just shift focus from kind of demography and income and kind of community well-being and cultural well-being towards a more economic perspective on this, to try and drill inside and get an understanding of why this situation exists. So, first up off the block, number one, there is a problem with GDP accounting. Now, this is a graph from 1861 through until 2012 of the actual real growth in millions of dollars New Zealand of GDP over this period of time. And you know, when you look at that, you kind of go, well, gee, that looks all right. However, the measurement of gross domestic product involves a national accounting blind spot. Okay? GDP counts all final goods and services, and this means that natural disasters, disease, unemployment, ecological species extinction, vehicle accidents, crime, family breakdowns, suicides, ecosystem decline, gambling, drug and alcohol addiction, illness, pollution, water scarcity, over-harvesting, greenhouse gas emissions, deforestation and cultural extinction are actually good for GDP.
Can you explain that?
In other words, let's just take one of these for example. Let's take vehicle accidents. So the more vehicle accidents that occur, the better that is for GDP. Why? Because when an accident occurs, you've got to get the fire brigade in, you've got to get the ambulances in, that person's got to be taken to hospital, the hospital has to treat them, it's going to take probably years or weeks or months for them to recover, and they'll need ongoing medical care and treatment, etc., etc. Accidents generate economic activity. And it is the same with all of these other areas. Okay, in other words, we're in a kind of paradoxical situation where those things that do harm in terms of social well-being and cultural survival are actually celebrated in terms of the measurement of GDP. Internationally, there has been a move to try and come up with an accounting framework, a national accounting framework that corrects the inadequacies of GDP, and it's called the Genuine Progress Indicator Accounting Framework. And when you step into this space here, you require a little bit of a shift in thinking. In the old GDP thinking, this was based on the question, how fast and how big can we grow GDP? When you shift into the Genuine Progress Indicator accounting approach, it's not that growth is irrelevant, but the key question is, what is the best way to grow? Or are there methods of growth that avoid the unwanted ecological, social, financial and cultural effects? Now, just in theoretical terms, if you were to put a GDP alongside of a GPI measurement, what would that look like? So just imagine we've got a graph here with GDP and GPI on this axis, and we've got time across this axis here. If GDP and GPI were the same, then you'd have one kind of solid blue block like this. In other words, GDP equals GPI. In other words, the growth of GDP or economic activity within a country is actually good for the environment. It's good for social well-being. It enhances prospects for cultural survival. Unfortunately, that's actually not the case. This is the GDP GPI per capita for the United States of America between 1950 and 2002. Now, just to make the point, the US doesn't actually have an accounting system based on GDP GPI accounting. This graph here was created by a set of academics up here in 2012 who are looking back retrospectively and using past GDP data to calculate a GPI just to see what the two graphs would look like. So you've got GDP per capita on this axis and time across the bottom axis. Now you'll notice that those two graphs, the GDP on top and the GPI on the bottom, are actually not the same. So here's some of the characteristics. This branch of the graph here represents economic growth. This is GDP. Underneath this graph here, this is the area underneath this, in theoretical terms, represents the cost of economic growth. So when we grow, we generate ecological, social, financial and cultural effects or costs, right? Which means that once you take GDP, you subtract all of those costs out, what's left is a measurement of genuine progress here on the bottom. Now, once you understand that basic theoretical proposition, then there's some interesting architecture in this graph. Firstly, you'll notice from the 1970s onward in particular, GDP has continued to grow, but the Genuine Progress Indicator has actually levelled off in the States, is now actually in decline on balance. And what's this telling us? Actually, the defining lesson from genuine progress indicator accounting that has emerged is that more economic growth is actually not equal to more well-being. And this is not just for the United States of America. This is a trend that exists across the Western democracies. Now let's come back to this idea that I drew your attention to earlier, that there are actually two models of economy here in this country. This one here, New Zealand's mixed market economy, and this one here, Ohanga Māori, the economy of Māori culture. When you think about this in terms of GDP and GPI, this model of economy here, which is based on a goal of growing GDP, achieves GDP growth as the result of a decline in well-being over here. And you can see this visually. So this is a case study from my own rohi in the Horowhenua in Marae-Waakainga. So you've got the Horowhenua coastline here, Kapiti Island on the bottom, the Marae-Waakainga plains up in here, and the Tararua ridgeline up along the back here. This graph is the pre-1840 cover of Ngāhere Urutapu, or the indigenous forest. On top of that, in this graph here, this kind of ink block represents the former extent of coastal wetlands. And this here, the 2012 land cover database, represents the current situation today. And all of that yellow you can see is pastoral farming activity. Now you can represent this numerically as well. On the bottom axis here, we've got time from 1840 through into 2009. And on this axis here, we've got percentage represented. So in this graph here, what we see is the emergence over this period of time of the local settler population that arrived in the Manawatu. This is the expansion of pastoral farming. And that obviously is growth in GDP for the region during this period of time. However, this is the collapse and decline, ongoing decline in the local Māori population. This is decline in the Ngāhere Urutapu. This is decline in local wetlands, kukuwai. This is decline in local indigenous grasslands over that period of time. Now, here's the point, that the increase of this here, the growth of the settler economy, was achieved as a result of the decline of the Māori economy. And that, again, is not just a kind of conceptual institution. We're talking about the decline of whānau Māori. And you'll notice that this graph here in New Zealand is very, very similar to this graph here. In other words, we're in a situation in our economic paradigm at the moment in which economic growth is being achieved as a result of well-being decline. We now look at low wage growth for the last 3 decades. Now, this is a graph from 1902 out to 2012-13, which is a real income wage index for New Zealand. It's based on NZIER data. And once again, you look at this and you kind of tend to think, well, that doesn't look too bad. Wages are going in the upward direction. However, when you drill into this, which you can do in this graph here, you see a slightly different picture. So for the same period of time, this graph here shows you the annual average increase or decrease in wages. So there's a negative axis down here and a positive axis up here. So in some years, you'll notice that we had positive wage growth, in some years we had negative wage growth. And the upper and lower bounds, sometimes our wage growth pushes up to around 10% per year, sometimes it drops down here to around negative 10% per year. Now there's a couple of important time markers on this history that I want to draw your attention to now, just to help you to get a sense of where we're up to at the moment in terms of the tank sub-catchments. First of all, this period of time in here from the 1950s onwards was the post-war reconstruction of Europe, in which the New Zealand economy was very buoyant and very active and successful and prosperous. Now that took us into the 1960s, the golden years, where there was strong economic and wage growth during that period of time. However, in the 1970s, we hit the energy crisis. You remember 72, 73 was the first oil shock, and then later the energy crisis, which put a lot of inflationary pressure on our economy and repressed wages during that time. Now, then national government's response to that shock was the Think Big project. Okay, the expansion of the Marsden Oil Refinery, the Motunui synthetic fuel plant, etc. And unfortunately, even before these projects were finished and commissioned, there was a shift in the international price of energy at that time, and these projects became unviable and uneconomic. And New Zealand was left saddled with an enormous debt. which was taken up by the government in 1984-85. This was the David Lange, Roger Douglas government. And facing this very large national debt, they began this process of the liberalisation of the New Zealand economy. So during this period of time, from the 1980s right out into the present time, look at what has happened to wage growth during this period of time. It has been right down in the lower end of our historic wage movement. So we've had repressed wage growth during this period of time. How did the government respond to this debt crisis? There were 6 kind of key macroeconomic coping strategies that they used. The first one was in terms of trading our currency on the international markets. Just before the election of the Labour government into power into 1984-85, you remember there was a run on the dollar. The incoming Labour government, the investors were worried that the Labour government would devalue the dollar, so they started pulling money out of our currency, withdrawing their investments. And just before David Lange and Roger Douglas took power, they had to get Robert Muldoon to devalue the dollar by 20%, which he was very resistant to. Up here, at the end of the 1990s, there was another real dip in our stock market and the currency trading at that time. The New Zealand Treasury responded to that by taking an undisclosed amount of New Zealand currency and selling it on international markets for $9 billion to try and cool down our currency. And then, of course, we have the subprime mortgage glitch a little bit further up there. So managing the pressure on our currency has been an important coping strategy. Another coping strategy was the importance of free wage bargaining. In other words, try and get wages down to make us more competitive on international markets. And you can see the history of that here. This is an index of trade unions. The next coping strategy was to control inflation. So we have the Reserve Bank Act up here in 1989, which was used then to keep both wage growth and inflation under control, selling the family silver, the state asset sales, and shifting government expenses back onto communities, this whole idea of user pays, which has led us to this situation at the moment where we have now around a $500 billion national debt that is composed largely of the housing market debt here, about $250 billion, and other allocations of debt as well. Now, we have to pay the debt back, and the national government, of course, has been very focused on this. In 2011, they came up with the business growth strategy, where they were calling for a compound average growth rate of around 7% over the next 13 years in order to deal with this debt problem. And that explains why the national government has been so focused on debt. Now let's come back to the tank catchments and look at the whole idea of household coping strategies. So how did families deal with this period of low wage growth and these shifts in our economy? Well, coping strategy number 1 was more women entered into the labour market. So this graph shows you here, over the period of time for New Zealand, the rate at which women are entering the job market, and you can see we're into a very, very high level now, up over 1 million women in the labour market here in New Zealand. If you look at early childhood participation, now up to around 90%, is a prerequisite to entry into primary school, which is just an indication of mothers in the labour force. Coping strategy number 2, women are in the labour force, we're still not breaking even, so what we're doing now is we're working longer paid hours. And when you look at the Hawke's Bay region as a whole, this was the traditional 40-hour working week here. Most of the population is now sitting above that, and you've got this tail out here who are working way, way, way more than the average working week. Coping strategy number 3, the use of credit cards. You smooth out the highs and lows in your family income with the credit cards. This has led to a huge increase in credit card use over this period of time, and corresponding unpaid credit card debt. And lastly, because we have no capital gains tax in this country, the housing market is the next option for growing wealth. And what we've seen is huge pressure on our housing market, with the debt level now sitting up over in excess of $250 billion. Just to give you the orders of magnitude there, our GDP is only around $250 billion. And lastly, coping strategy number 6, when all else fails, you turn to crime, addictive behaviour and domestic violence and suicide, ... Now, I particularly want to focus on this just to give you a sense of the real well-being of where some of our tank catchment communities are up to at the present point in time. This is a graph which shows the percentage allocation of crime across the entire Hawke's Bay region. And this is the Māori cultural contribution to that crime by age cohort. And when I presented this, over the weekend, there were some pretty teary eyes around the table. The thing that really first startled me was the very first age cohort in this distribution of crime across the population is 0 to 9 years. Now, between 0 to 9 years and 30 years, 45% of all the apprehended crime in the Hawke's Bay region is committed by this group of the Māori population here. When you get up to the regional total, 60% of all the crime committed in the region is committed by Māori within these age cohorts. And that's a pretty sad statistic. I could then go on further and show you graphs for drug use and addiction, obesity, diabetes, domestic violence, suicide, etc., 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 ... We don't need to go any further. I think that's probably enough. Let's take a quick look at the Hawke's Bay economy, and what I'm particularly interested in here is the structure of the economy and its capacity to respond by generating new value that will help this trickle-down process to respond to this huge growing need in the bottom end of the wealth within the region. And basically, when you look at, this is an NZIC classification down to about 15 different sectors, which is not the only way we could look at this, but it's simple and workable. You have two primary sector industries within the region. You've got a couple of intermediate sectors, and the rest are all service sectors. Now, if you look at, the four kind of sectors within the economy that contribute 40% to regional GDP, you're focusing on manufacturing, agriculture, forestry, mining and fishery, and other manufacturing here. So in other words, manufacturing and agriculture play a really, really crucial role in generating value that is used by those intermediate and service sectors of the economy, which means that the economy is really resting on two kind of central pillars. Now, how does an economy of this kind survive in a global context today? That's a really, really interesting question. And if you look at what's happening, an economy and businesses in a global marketplace need to be agile, adaptive, creative, responsive, evidential. There's an increasing need that they're research-based, accountable. Branding is important today. They need to be demonstrating social fairness, ecological sustainability. They need to be resilient and forward-looking, and in particular anticipating market shifts and disruptive events like, the onset of disruptive technology. Now, this is my characterisation of the Hawke's Bay economy from what I presented today. You've got high levels of income inequality. You've got high levels of ecosystem harm. In other words, I would say the economy at the moment is ecologically unsustainable. There's ongoing multicultural well-being and survival decline. There's a high level of welfare dependency. You have the question of how you're going to achieve this goal here, debt reduction, and in a context in which growing economic growth in the region is now water limited, because your primary industry that's generating value is now pushing the limits of its water use. So your economy is somewhat fragile, dependent on 2 to 4 kind of key sectors. You've got an ageing sub-replacement population, and you've got a very mobile population as well. So if we're going to depend on the trickle down, you've got some real challenges ahead to address this.